You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, markets down. Are they going lower? How much lower can they go? I don't know the answer, but perhaps the answer to that question is in the futures market. An expert chief market strategist of Blue Line Futures, Phillip Streible, is with us now, back with us. We appreciate your coming on the show, Phil. So tell us, what is your view of the future and what can you do about it?
Looking at where we stand right now in the markets and the economy, I continue to believe that we are still in the midst of the middle of the tightening cycle and that the Fed is going to continue to over-tighten into the beginning of the new year, as well as many other central banks. We saw just before this recording, the ECB had raised 75 basis points. We also saw Bank of Canada. They pivoted slightly dovish by only raising 50 basis points as opposed to the 75 that was anticipated. I think that these central banks that are not getting ahead of the curve are going to put their economies at risk because they're not tackling inflation whatsoever. And I think that over the next couple quarters, we're going to continue to see a series of sticky inflation, higher interest rates, and lower growth, which spells a recipe for disaster and lower stock indices from here.
Well, you're a breath of fresh air.
Thanks.
All right. So things are going to go from bad to worse. But hey, the good news is today, on October 27th, we found out that the GDP, at least at first blush, increased by 2.6%. Seems to fly in the face of everything you're saying, doesn't it?
Yeah, and the problem is that, you look at these economic data points that come out and they're such in the rear view mirror, and that's what the Fed bases their decisions on how they raise rates is what happened in the past. They have no forecasting system. They're not allowed to do that, and they won't deviate from what they're doing. So that's why you always get the result of an over tightening in the market. So you see better GDP, you see higher inflation data, you're going to see that Fed come out and they're just not going to let up on 75 basis points. So it's, you look at it from simple terms that many people can understand, like if you were looking at a house right now and you wanted to take out a 30-year mortgage, it's going to be north of 7%. Just a year ago, that was under 3%. So, those costs are real. They will slow down and they will break markets.
Mm-hmm. All right. Well, so we shouldn't be, conned, or we shouldn't be dissuaded just because we get a little bit of good news. I mean, employment is still holding pretty well, isn't it?
Yeah. The interesting thing about employment is we saw a series of many major companies out there doing a series of layoffs. They did blind layoffs, just blatantly, reducing 10% of the work staff or laying off left and right. Seemed like those stories weren't really covered as a negative aspect. They were looking at cutting costs coming into this slower growth environment. Now, many of those companies out there are in the hiring process or rehiring, but unless they're really essential, unless they're trying to specifically fill holes, it just seems like the employment pool that's out there, the number of candidates that have been recently released are trying to fill too few spots. So I think, that the unemployment rate's going to continue to tick up here, and it's going to tick up into this fourth quarter. And even the Fed admitted that. They said that, don't be surprised if you don't see unemployment pick up, and that's a way that they could slow down demand for goods and services and bring down inflation as well.
Okay. So is the Fed going to be successful in actually bringing down inflation? Is this going to work, or are we just going to have stagflation, or what I like to call steakflation, where everything's going down, but the price of my bone-in ribeye is going up?
I got to tell you, I went to like 3 different steak places recently and I was shocked. Like a 5-ounce, 6-ounce filet was $70, $80. If you go to a nice restaurant, I mean, you start adding sides and things like that. You're talking for a couple of people, it's going to be $300, $400, $500. And I mean, it's a lot of money for just going out for a dinner. So, but getting back to your point, this inflation, it's such a vicious cycle because if say the Fed pivots, say they come out and they don't raise rates aggressively, you see the prices of everything from oil and metals and other commodities out there. It's mainly the energies and the ags and mainly the meat, like live cattle and feeder cattle, are all shooting up as that Fed goes dovish. And it's because of that inverse relationship with the dollar. This is definitely going to stick around for a long time. And the problem is we're caught on this Ferris wheel. So they over tighten, the prices come down, they end up breaking some markets down. The data comes out weaker than expected. They think the Fed's going to pivot. The asset prices all go back up. It's literally a circular flow chart.
Okay. So really the genie's out of the bottle. There's nothing they can do.
Not really. I mean, and I hate to get back to, it's a lot of it is logistical issues and supply constraints from that. It's all stemming from basically the Ukraine and Russia deal. It's the higher energy costs spill over into other things because the cost of goods sold ends up going up. You look at something like a pub in, in the UK, their energy costs or heating costs coming into winter, they're going to be up dramatically, which they already are. Their electricity costs are up. And hey, how do they make up for that? They raise the price of a beer or raise the price of a steak on the menu. And that's just the way that this cycle goes.
So you think we're starting to see inflationary expectations built into the system now?
It's gonna remain sticky. I'm telling you, unless you get a real crash, unless you get a real reset on these markets, that's when you're gonna start to see it. There's certain aspects that are there. You look at like Facebook just before this recording, that fell 30% on lower ads, many of these things in ad revenue, many of these things and many of these stocks out there that are starting to break down. That's the first kind of sign of things starting to reset.
All right. So how as an investor, do you defend yourself against a deteriorating economic picture with higher prices?
So, I mean, the first thing you got to do, like on the equity side, you have to understand that like having dollars, that is a position. So as your dollar index and as the dollar moves higher, that's your purchasing power is increasing. So maintaining a cash position in your account, that is something. Equities on these bounces that we're having, where these are massive moves. You look at the Dow Jones, they put together back-to-back sessions just recently, 800 points. One point, when we were doing this recording, it was up 500 points. These are all the people that are chasing. They're chasing some narrative. They're chasing some clickbait that the Federal Reserve is pivoting. The Fed Reserve, it's not truly a pivot until they are cutting rates, and they're not anticipating cutting rates until the end of next year. Anytime when they cut less, drives the inflation back up, they're going to have to hike more. If they stop raising rates, that's not necessarily a sign of a pivot either, because if inflation comes back, they'll end up doing it. It's when they cut rates, that's when you get back on the long side.
Okay, so we're talking then about the Powell pivot. Is that inevitable?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive. now more than ever.
It will be inevitable. It's priced in the first quarter it's the last quarter in 2023, first quarter 2024 is when they expect the Fed to finally admit defeat and cut rates. We've already seen some central banks out there, they have cut rates. You look at places like Japan, they're going to consistently, they're always going to be in the defensive mode, trying to, paper their markets over. But we do have 5 central banks meeting next week, and all of them are expected to raise rates aggressively. So I think that they're trying to get ahead of it, but we'll see which ones balk and which ones end up a little bit softer on their hawkishness.
Mm-hmm. I'll buy it. I think eventually they have to break because it becomes a choice between inflation or economic collapse, right?
Exactly. And one part of it was, we're coming into these midterms. They really were trying their hardest to get oil prices down, to get inflation under control, and get these equities back up. And that's really failed. So I anticipate that after the midterms, I think that that's when they're going to surrender, because it doesn't really matter. They're not fighting for, election anytime, at least in the near term. And I think things can come unraveled then.
All right. So talking about elections, not politics, but as far as impact on the economy, is there going to be an impact from this election?
From the midterms? I don't really think so. You're just getting a shuffling around. I think that it is more, social values and things like that are what's really being weighed in. As far as inflation's concerned, everyone is talking about it and a lot of finger pointing and stuff. But again, I just don't believe, if you take certain politicians, they can't control like agriculture. They can't control the weather. They can't control a hurricane that goes through, Florida. It's just certain things are there. They're going to impact the economy and impacts prices. Like a hurricane going through has driven up orange juice prices substantially. There's nothing you could do about it. If you need orange juice, there's inflationary pressures there that were met that was not driven by anything with regards to politics. Now, as far as energy independence, I really believe that that's something that needs to be addressed. The SPR is designed as exactly what it is. It's the Strategic Petroleum Reserve. I don't think you should tap into your long-term savings. That's your rainy day fund. And I think that there's a lot of things you could do to get those oil prices lower. So I think those
producing.
What
about that novel concept of actually producing more, and that might have a miraculous effect of driving prices lower, huh?
It really, it's quite a head scratcher for me. So I
who would have thought?
It's tough. Yeah. So
yeah, well, the easiest way is get it from the ground, right? Rather than the Strategic Petroleum Reserve, right?
And back on on the political side, I did listen to some of these debates just recently, and it's not only bringing oil out of the ground, doing some fracking, being energy independent, you'll lower those prices, but you're also going to create jobs. You're going to relieve pressure on people's pocketbooks. They're going to be able to spend more money, then they'll be able to stimulate the economy. So I'm not political one way or the other, but I definitely see a strong argument for energy independence.
Okay. And looking in the futures market here, it seems to be telling us this too, doesn't it?
Oh, of course. And you look on oil, the farther out you go on price or on natural gas, the cheaper it is. And I think it's because of the fact that they realize that they're going to have to start increasing production and get those production levels back up to near record highs. So that's where that backwardation comes in, and it's priced in the futures.
And let me just go back to one other thing, like Tesla. All right, the stock is doing bad, but the sales are through the roof. But maybe electric cars are the way to go. The government certainly has decided that. Who am I to argue? But till we get to that point, to see the government try to force an energy transition It's never happened before. It wasn't the government that switched people from horse and buggy to Model Ts. It was the market. And yeah, they could put in incentives, okay, but they can't mandate it, which is what they seem to be trying to do. It's destined for failure.
I mean, I can't agree with them doing that. I can't agree with them forcing that. I mean, you look at what is the long range, just picking on Tesla specifically, what is the range of that battery pack? What if you were involved in one of this hurricane that went through? You're not going to be able to get to a charging station. The line would be, days long for not even that many vehicles. And the range wouldn't even get you out of the site where you needed to go. So I think that you're going to need to have the combustion engine, and that's going to have to be around a lot longer than what they anticipate. So the other thing too is we as a nation really respect the global environment, nature, and things like that, and all those good intentions, but you're not going to get real change until you get other countries doing that. I just don't.
Yeah,
you got to get on that initiative too.
Absolutely. All right, well, Phil, always great having you on, getting your perspective, because I think in this market, the only way to succeed is to be a trader. People want to find out more about you, connect with the company. How do you do that?
You can go to bluelinefutures.com. We've got a great bit of research. We also have an entire educational section on the futures and commodities markets. We offer a free 2-week trial on our research. Go ahead and register for the Morning Express. It'll give you great macro fundamentals, get you going right ahead of the market every day as far as what the top headlines are and then how we're positioning in the market. That's the Morning Express newsletter.
All right. Yeah, you should sign up for that. You should sign up for our newsletter, financialsurvivalnetwork.com. And while you're there, click the link to Blue Line Futures and you'll find out all about the company and what Phil does. And if you got any questions, Phil, myself, futures or other economic matters or anything else, shoot us an email, kl@kerrylutz.com. We'll get you an answer real quick. Phil, always a pleasure. Thanks for stopping by.
Yeah, thanks for having me on.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.